Hello out there, dividend growth stock investors. It is Colby, the DGI Crab. I'm coming at you here with another episode of the Great ETF Race. Episode 15. It's been a little while since I did the last episode of the Great ETF Race. I took a little bit of a break from doing these each and every week. But I have not taken a break from the investment strategy that I've employed utilizing the great ETFs. Set it and forget it. That's the name of the game when you're investing in ETFs, everybody. You do not have to be an expert in researching stocks to be an exceptional, accomplished dividend growth stock investor. You can just pick one or two, or in this case, maybe even 8 different ETFs to just simply dollar cost average into each and every week, reinvest all of your dividends, and watch your wealth and, even better, that passive income continue to grow. So what I've done here, if for those of you who are new or may have forgotten, I have selected 8 very popular, well-established, dividend-themed ETFs. And what I've done here is I have been investing $5 each and every week into all 8 of them and let them just go up against each other and see how well they do. I'm doing this on the SoFi platform. You can find a referral link down in the description below to SoFi. I think that it is a great platform to invest off of. You could invest in fractional shares. Setting everything up is very, very easy. So if you are looking for possibly a new brokerage or even a side brokerage to maybe do a little bit of experimenting with, like I've done here, I can't personally recommend SoFi enough. They are certainly not a sponsor of the channel. I'm not getting paid anything for that. I just really like the platform, and I think it's worth giving a try too. So these are the 8 ETFs that I have selected here, and we have, in order of how well they've been doing from an overall value standpoint, we have Vanguard's International High Dividend ETF VYM, Wisdom Tree's Monthly Paying DHS, Vanguard's High Dividend American style ETF, VYM. Another Vanguard one here, VIG, the Dividend Appreciation ETF. DGRO from State Street. SPYD, or DGRO from BlackRock, SPYD from State Street. SCHD, the internet's favorite dividend ETF from Schwab. And then finally, Vanguard's VBR, the small cap value ETF. So I've got them sorted here by the overall value of the position. As you can see here, I'm up to $210 invested in each of the 8 ETFs. And this column here represents the total amount of dividends that have been paid out since I have started this position. Over here in column J, we can see the projected forward annual dividend income that the positions will pay out, and the value position where they're just at overall right now. So VYMI is on top with all of the disruptions over the last month or so with tariffs in the markets. A lot of the U.S. stocks that make up the other 7 ETFs have taken a major hit, and the international scene is actually doing quite well. VYMI is in a very comfortable lead right now. There have been times VYMI has been in last place. If you go back and look at some of the previous episodes of this series, I do keep these all in a playlist on the channel, by the way, if you're curious to go back and see how this has developed over the long haul. But VYMI, not only has it paid out, well, it's paid out the second most amount of dividends. It's just behind SPYD by 7 cents. But the $3.94 of dividend reinvestment is a small part of the equation for the success VYMI is enjoying right now, as it has a $17 lead over the number 2 position, DHS. Wow, VYMI really doing well. This is the only non-US stock investment that I make for my weekly investments, not counting this portfolio. I put 5% of all new money into VYMI, so I have exposure to the non-US stock market, but I only want the stocks that are paying out dividends, and VYMI is a super diversified ETF with 1,500 give or take positions in it at any given time. It's performed very well over the years, and it is doing a great job here in this portfolio. Absolutely. Now, a few weeks ago, most of these positions were actually in the red. SCHD and VBR are still in the red right now, but not by very much. And I'm not particularly concerned about whether or not a position is in the red at any given time. The stock market's going to go up, it's going to go down. There will be swings here and there, but when you're just dollar cost averaging each and every week and thinking with a long-term time horizon, which is what you should be thinking about, especially with ETFs, you don't have to worry about all of the peaks and valleys that the market goes through. You could just set up investments like I've done here to just go through every single Monday. I don't even have to think about it. I just come in here every Tuesday or Wednesday whenever I get around to it, honestly. And I just make sure that I'm updating my amount of shares. And if there have been any dividends paid out, I do update those numbers. I like to keep a spreadsheet, just manually track all of this. SoFi and a lot of other investment platforms will do a great job of that for you. But I think it is very much worth keeping a spreadsheet and just doing some manual data entry yourself on that as well. It'll keep you a little bit more on top of your positions week over week, and you'll just feel like you've got a bit more ownership of it. So definitely get yourself a spreadsheet, whether you're using Excel or Google Sheets or whatever. It's very much worth tracking this on your own. It doesn't take a whole lot of time. And now you guys know, if you've been around here a while, you know that I'm not really one for graphics or anything like that. I want these videos that I put out to be conversational, and I wanted to show you guys just basically how to do things like this day to day, week to week as you're investing. I thought it'd be, since our Q1 dividends were all paid out pretty much late last month, I thought it would be worth just going in here to Seeking Alpha and just checking each of these to see how Q1 of 2025 compared to Q1 of 2024. Very simple to do this on Seeking Alpha. You just type in the ticker symbol here, pulls it up, and you can see here I'm not even using like premium Seeking Alpha. This is all just free information that's out there. I like to go over to the dividends tab. And from there, we're going to check out the dividend history just underneath that. And then we can compare Q1 of last year to Q2. So VYMI, a little bit less in Q1 for 2025 as in 2024, just about 1.50 cents, 61.5 cents versus 60 cents this year. I'm not extremely worried about that. That's pretty well in line with where they were before, and with the share price doing so well, I'm particularly not all that concerned about it. We'll keep going with the Vanguard funds here. We'll go to VIG next. And now that we're on the right tab here, it'll be even quicker just to scroll down and see. VIG, great increase here from Q1. You can see just shy of 77 cents Q1 last year, up to 93.77 cents this year. I love VIG for this reason. We can expect really consistently high dividend increases out of VIG. That's kind of the purpose of VIG. It's going to have a lower starting yield than VYM, but higher dividend increases year over year, which is why VIG is a fund I really like for the 18 to 30-year-old tier 1 investors, especially. VYM also had a great dividend increase. They had 65.5 cents last year, all the way up to 85 cents this year. VYM had only about 0.5% better dividend in 2024 in total than they did in 2023, which was kind of a bummer. So they're off to a great start this year in terms of dividend increases. Next, we'll keep moving right along the line here with our Vanguard funds. We'll look at VBR next, the small cap fund. Small cap's down right now, but the dividend payout's way up, 94.25 cents in Q1 of last year, all the way up 30-cent improvement to $1.24 in the first quarter of this year. Nice job there, VBR. Really happy with that one. Next, we'll review SCHD, who just continue to crush with the dividend increases. The share price isn't doing great, but the dividend increases have absolutely been solid. So In Q1 of last year, we saw 61 cents for SCHD, all the way down to 24 cents in Q1 this year. But I think that with the reconstruction of the portfolio SCHD's gone through, we're probably going to expect a lot higher dividend increases over the next 3 quarters for SCHD. We'll have to wait and see. But if the SCHD dividend goes way down, oh, wait a minute. You guys, I'm sorry, I made a rookie mistake here. So this is a good learning opportunity here. So remember, SCHD last year did a 3-for-1 stock split. So what I actually need to be comparing this to is the adjusted amount over here on this second column, because it paid out 61 cents, but that was when it was trading for 70 something a share. 3-for-1 stock split, triples your shares, takes it down into the mid to high 20s. And this is what we actually should be looking at is a third of this number. So it was 20.3 cents versus 24.8. So you just got to see me make a rookie mistake there in real time, but this is how you factor in the stock splits. So if the stock split had happened early in 2024, then this would have actually been the payout as opposed to the 61 cents because you had a third fewer shares. Okay. So good opportunity to look at comparing the adjusted amount on Seeking Alpha. We're going to go to DGRO next. No stock splits to worry about on this one. So this one will be a little bit cleaner. 31.07 cents in Q1 last year, 31.09 cents. It is an increase, but it is marginal at best, but better than seeing that number go down. We'll move on next to SPYD, the 80 highest yielding stocks in the S&P 500. I really like this one for older investors who just need a safe place to kind of park some money but still remain invested in stocks. We had 37.29 cents last year, 41.89 this year. That's a nice increase from SPYD. Yield's a bit higher. Dividend increases aren't typically going to be anything crazy, but we got a nice start to the year here in Q1 for SPYD. And then we'll finish this off with DHS. Little bit tougher to figure out here. We'll have to do a little bit of mental math because DHS does pay out monthly. So we'll have to look here at the first 3 months of last year, 9 cents, 20 and a half, 28 and a half. So that'd be 49, 58 cents from January through March of last year. This year, 12, 16 and a half, and 30 and a half. So that's going to be 57, 59. So 1 cent higher over the course of those first 3 months. DHS does yield a little bit higher as well. Typically in the high 3s is about where DHS is going to yield. But it gives you that nice monthly payer. Very well diversified group of stocks. Structurally, it's kind of similar to VYM over there at Vanguard. It's just going to be one that pays out on a monthly basis. So certainly off to a good start. We can do a sneak peek here. 30 and a half cents for April. And last year in April, they did 30 cents. So over the first 4 months, we're 1.5 cents better on DHS than we were at this point last year. So this one is certainly moving in the right direction as well. It paid out ever so slightly less in dividends in 2024 than it did in 2023, breaking its streak. It wasn't a massive reduction, but it was a bit of a reduction. So glad to see DHS getting off to a little bit better start so far here to begin the year. So guys, that's the great ETF race. And I'm going to show you one final thing here. Not quite enough content on this one, I don't think, to do an entire series, but I wanted to remind you all that I am doing another little ETF experiment here, comparing SPY, an S&P 500 ETF, to SPYI, S&P 500 covered call ETF, to see which one is going to outdo the other. I'm investing $50 at the first of every single month, so I'm about to put another $50 into each of these when May rolls around. I've got $200 invested in each so far. SPY has not given me a dividend yet. That's going to be coming here very shortly, but it's not a high dividend. And then SPYI has paid out $4.88 to me so far in dividends. But you can see here, They're pretty close together, but SPYI does have the edge right now, but it's mostly because of those dividends. All right, guys, that's the episode. See you next.